everybody, and welcome to another edition of BullionStar Perspectives. My name is Ronan Manly, and today we're delighted to have David Morgan with us. David is one of the most authoritative sources and analysts in the silver industry. He's very well known. He doesn't really need an introduction, but for people who might not know, David is author of the Morgan Report. He's been studying the silver market for many years, maybe 30, 40 years. He's the author of a number of books about the silver market. And he's the go-to person when anyone around the world talks about silver. So we're delighted to have David with us. Hi, David. Good morning. How are you?
Ronan, I'm well. Thanks for having me. It's good to see you.
I guess 2021 is probably one of the most exciting years for silver in a long time. It probably even is more exciting than what happened in 2011 when the price rose. And I was reading one of your pieces from the Morgan Report, the March edition recently, and you said that you also thought that this was one of the most exciting times in a long time, and that we could be on the cusp of a silver price rise, and it could be the beginning of a new bull market. And with the silver squeeze that's been happening, started off by the Reddit community back in January, early February, would that concur with your views that this is a very exciting time, a historical time in the silver market?
Ronan, exactly. I mean, what you need for any market to move up or down is, for moving up, you need more buying pressure. And how do you get more buying pressure? Well, there's several ways, but the number one way is education and awareness. And people like BullionStar, myself, and many others have been educating the public for a very long time. But we're sort of in an echo chamber. People that have caught the story become, people that buy bullion, maybe hold it, store it, stack it. But it really hasn't expanded in a very long time. And now with this Reddit group, Wall Street Silver, it's starting to expand into what I think is the most important community, and that's the younger generation, to really understand the benefits of an honest financial system. So that's what you need. You need further, a broader base of people that will buy the metal, understand why they're buying it and hold on to it or spend it as they see fit.
And would you say there was a lot of enthusiasm and media attention on the silver squeeze movement in late January and early February? And this was just resulting after the GameStop Wall Street Bets people, and it spread to a more specialized group, Wall Street Silver. But from what I can see, there have been some material impacts that has produced. For example, it got some of the big ETFs like SLV and the Aberdeen Standard to change their prospectuses, because they wouldn't have done that otherwise. It got the LBMA recently to change the reporting lag for their silver vault inventories from 1 month down to 5 days. So that didn't just happen out of thin air. And we can see now that the March silver contract in COMEX, there's been very high deliveries, much higher than normal, and that could also flow into May. We've had silver shortages in the retail industry all the way up through wholesalers, and the 1,000-ounce bars have a lot higher premiums than they would have had last year. For example, it's gone up from maybe 60 cents a bar to 120. So are all of these things transitory, or do you think that they're at the beginning of a real impact that the silver squeeze movement is having?
Well, I think it's the latter. I think it's very much an impact to what's going to take place in the future, and I don't think it's too far off. If you go back to the 1980s, with Jurowski being a member of the futures CFTC, or a member of the exchange, and being massively short silver. And then when we had this gathering with GATA, I forget what year it was, where they met with the CFTC and they invited different participants. Bill Murphy as one, Jeff Christian was there as also. Well, Jurowski made a comment. He wasn't, to my memory, he wasn't there. He might have been, I don't recall. But I do recall his comment, and he said it in Latin. I forget the Latin term, but it's basically, it takes a lot of guts to do nothing. Well, that's what he claimed that he and others did in 1980. Well, they did something. They said you can only take sell orders. You couldn't buy any more silver. So I have little use for these people, but I do just reaffirm what you said. Look, they're not going to go to the lengths that they went to change two prospectuses, to obfuscate the market, and we can see through their obfuscation, meaning the physical demand is taking it off the COMEX. They put in 2 sub-custodians like overnight to take in. If you read the prospectus, and I know you studied it probably harder than me, there's really no accountability, especially for the authorized participants. So there's a lot of mirror gazing and smoke going on in those rooms, and they're trying to protect themselves. They're already protected by the original prospectus, but they're making damn sure that they're protected going forward. So it is a pretty heavy sign to me that we're getting closer and closer. The main problem, I'll go on, is on a short squeeze, like in the GameStop, once the shorts have to or decide to start buying back, the buying pressure is phenomenal, because especially at a large short position. And it just feeds on itself. It goes exponential. And this is what I think they fear, is they can get out of it. They can close a contract with cash, but they don't want to do it at a high level. They do it at a low level. They get it into the trading range they're used to, with the participants being the trading funds mostly and the public. And they wash, rinse, and repeat, meaning it goes within a trading band. Right now, we're still at the upper level, and I haven't looked at the COT yet today to see how much change there's been in the commitment of traders. But regardless, you hit the nail on the head, Ronan. They did something because they felt compelled they had to do it.
Yeah, I found it interesting that both the SLV, which is the iShares Silver Trust, and the SIV, or Aberdeen Standard, in the wording that they both introduced into their prospectuses, they seem to have shown their hand that they're not really out for the interests of the investors in the ETF. They're out for the interests of the Wall Street banks, because they were both warning about what they might, in different wording, they said a temporary rise in the silver price, which was deliberately trying to put pressure on the banks and hedge funds. So even the wording of that suggests that these entities, the ETFs, they're not really just out there to provide long exposure to the silver price, and their interests lie elsewhere. But I think it's interesting also that there's not just one ETF in London, there's about 14 of them run by 6 providers, and the mainstream media and some of the consultancies, the precious metals consultancies, always seem to fixate on SLV, which has maybe, 20,000 tons, but there's about another 8,000 or 9,000 tons which are not part of SLV, which when you add to that, shows that there is a very tiny margin of free float available in the London market. And it brings me to a question about Sprott's PSLV. And now recently Sprott has done a new shelf registration agreement, which means that they're lining up 3 billion of the ability to issue new shares and then go into the market and buy physical. So would you say that Sprott PSLV, that new shelf agreement is a big deal, and that's going to put pressure on the London market? And because I heard that they were going out to London, Rick Rule was saying that Sprott is not only buying in Toronto and New York, it's buying in London.
Yeah, well, if I did the arithmetic right, you'll have to back me up in my age. But 3 billion is roughly 100 million ounces at $30 an ounce.
Yeah, so it's like, 3,500 tons or something.
Yeah, and so that would be enough, in my view. I mean, the float right now, what I consider the float, is what's in the registered category. And again, Ronan, I haven't looked, but I know it was well over 100 million ounces recently, and I know some's been taken off. But if you had that much physical demand, the thing about PSLV is, of all the ETFs, is by far my favorite. The fee they pay for their dealer is rather high, in my view, relative to the quantities that go in there. As you know, being in the business, more than that side of the business that I'm not in, but I certainly know the industry pretty well, is if you got a client that's going to put in $1 million or $2 million into physical, your markup's going to be not 2%. It'll be whatever it's going to be. But if it's big, it's going to go from 3% to 2% to 1.5% to 0.5%. When you're dealing with those kind of numbers, you're looking at. Now, I haven't looked at the contract to know if that 3% is at all purchases, or if it's sliding scale like I just outlined, and it probably is. The other thing that's a little bit, and it's nitpicky, but I do look at these things, is one of the APs, one of the authorized participants, is the same as one that's authorized for our friends at the iShares, but that doesn't really mean too much to me. But again, I want to repeat, I don't want to upset anyone. I want to be as grounded as I can. If you're going to do it with an ETF, that's the one I would choose.
Yeah, because from looking at the SLV bar lists back in February every day for about a few weeks, what they seem to have been forced to do was the custodian is JP Morgan, but they also use sub-custodians, Brinks, Malcolm, and Lomas. And they were only using one Brinks vault at the time, back in January, late January. And then with huge inflows into SLV, they had to buy, well, they claimed that they bought about 3,500, 4,000 tons of silver. But all of that new silver came in other Brinks vaults. Like there was a Brinks vault called Premier Park in North London. Then they brought in Radius Park, Brinks vault beside Heathrow. They brought in Lomas. So it's as if they were hitting obstacles, they were hitting limits, and they had to go around other vaults. But because that's in the LBMA, which is all very opaque, there's no real way of knowing who owned that gold, or that silver, was it leased, was it only, did they only plan that it would go in temporarily, and then they hoped that there'd be outflows and that they could give that silver back to whoever. But with PSLV, it's different because they usually hold their silver in Canada. And if PSLV is buying in London, it implies presumably that they'll have to bring that silver back over to Canada. So that would be like physical silver leaving the London market, which is a difference between what I think, a big difference between PSLV and SLV. I was going to ask you in general about your view of the structure of the physical silver market. Right now there's a supply deficit in the silver market where, for viewers that might not understand that, the total annual mining output from silver mines and secondary mines and scrap, that's maybe like a 1.08 billion ounces. And then you've got the silver demand, which is industrial demand and investment demand. But there's a bit of right now there's a lot of talk about the fact that at the margin, if investment demand increases, that's going to be competing with industrial demand. So do you think that that is a problem for industrial users going forward?
Yes, it is. I'll try to be brief. If you go back to 2020, just last year, the amount of silver bought for investment in silver commercial bar form, what we're talking about, what the ETFs have, it was the highest on record by far. Round numbers was 300 million ounces, off the charts. And then if you add the retail market and account for it the way I do, now there are other silver studies that account for it differently, but I consider any 1 ounce wafer, 10 ounce bar, 100 ounce bar, or any coin government minted or privately minted as physical demand on the retail side. That was a roughly 200 million ounces. So if you add those two together, you get 500 million. Unheard of. Never saw that kind of physical demand in the silver market in my lifetime. So that's what happened last year. So if we continue on that basis going forward in 2021, or even close to it, there will be a silver squeeze. There's little doubt in my mind, because the other half of the market is industrial, which means roughly 500 million ounces. Yes, it was less because of the illness, but we got to remember, silver mines were, some significant ones were shut down for 2 months, which is about 12%. The Silver Institute said there'd only be a deficit of about 3%, which doesn't make common sense to me, but regardless, it's going to be less physical mining in 2020 when the numbers come in. So then there's the other part of the market, which is silverware and silver jewelry. Those didn't go away. So definitely we had a deficit in 2020. I think we're going to see another one in this year. And, you know, the facts speak for themselves. I mean, I really like to not have to defend my position. I just like to point and say, look, can people see it for themselves? And as we've already discussed, just to reiterate briefly, look, stuff is coming off the COMEX. It usually doesn't. There's a premium on commercial bars, which you hardly ever see. And then the retail market is so backlogged that places like the Perth Mint and other rather well-established dealers are unable to get quantity. Yeah, they can spiel out a little bit here and there. And I get the deal of the US Mint. You don't have to correct me. I know they're doing a security feature and changing out and all that, and that's delaying the production. But nonetheless, discounting that somewhat, the physical demand on the retail side is so strong, it cannot be met.
In the gold market, they have central bank stocks like 33,000 tons, but that doesn't apply in the silver market because there are little, if any, government stockpiles in silver. But sometimes you see the consultancy reports, for example, Metal Focus or Thomson Reuters, saying that there are unreported custodian stocks in places like India or China. It's very difficult to get information and data about the magnitude of those, if they even exist. But do you think there are stockpiles that the banks and the central banks, if they didn't want the silver market to go crazy, could call upon to meet some of that deficit that couldn't be met by other above ground stocks? Because if the mines and the recycling are going, if everything that's coming out this year is going to meet industrial and investment demand, but if investment demand is too high or higher than it was, are there above ground stocks that could be called upon?
Do you know how to ask the tough questions? Yes is a partial answer. India, and I forget the amount, it wasn't all that significant in the numbers we're talking, has a fairly significant amount that is non-good delivery bars. It would have to be refined. So if they were going to cover their position, whatever entity was short of metal to meet their contract would have to say, well, we want to rewrite the contract temporarily. Give us 2 months to refine this silver out of the Bank of India, whatever it's called, and fulfill this many ounces or this many tons. So there's one, but I don't count that because of the problem of getting it refined. Russia, to the best of my knowledge, and I do have a little bit of an inside track, not as much as maybe some people think, but maybe more than other people think. Russia does look at silver as a strategic metal, but I don't think that they would in any way, shape, or form ever give up any of it to help some banker in the London exchange to cover their position. So you could count that out. I'm almost going to put my reputation on that. Where else is there? Really don't know. I've heard rumors through the years, a few, that so-and-so has, like, I forget the number. I was in New York at a very exclusive meeting, and one of the people there that was well ranked, let's say, told me about all this secret silver stash. So I started calling around to determine whether or not it was true, because I wanted to know. And I finally uncovered the fact it was bogus. It was just a story. You know, there's a lot of silver haters out there that can come up with magical silver, I call it. But do I know where every ounce of silver is? No, but neither do they. And so I just want to cover you, Roland, to the best of my knowledge. No, there isn't really any super big secret stash anywhere. India does have a fairly good stash. China, similar to Russia, I'm not sure what they would do. There's a lot of leverage in the financial world between entities because of, I'll say it, blackmail, or let's say political power. Maybe that's a more polite way to say it, that they could put some leverage perhaps on China and get some silver into London. But I don't think Russia would.
And you remember back in the 80s or 70s, the US was supposed to have strategic silver reserves. Did all of that stockpile get sold or used up? Was it something to do with the Cold War and that there was no need for it and it just disappeared or was sold?
Yeah, it was a strategic stockpile, and it was under the Clinton administration, and they were balancing the budget. So what they did was they took all the Social Security money, stuck it into the general fund, and gave an IOU using T-bills, or T-bonds, I should say, to replace it. So, you know, push the old switcherooning. The other thing they did was they looked at the strategic stockpile of silver and they said, well, what's that doing? Oh, well, we're just holding on to it. You know, we consider it strategic. All right, well, why don't we sell it? So they sold it. And that was when the law was put into, it's actually the Silver Liberty is the official name on the paperwork. Everyone refers to the Silver Eagle. I have no problem with the name. And so they originally said that they would use up the stockpile and mint silver coins as required to meet the demand. And you could only use domestic silver. So in other words, any new eagle would have to come from a silver that was supplied from the United States. Well, that went away pretty quick, and they changed the prospectus, they changed the law. So now they can get silver wherever from whatever to meet the demand. And of course, the demand isn't always met, as we well know right now. But no, it was just one of those things where the idea that most politicians have, and I will speak for them, have this erroneous idea that just-in-time inventory is a magic situation, that no matter what it is, where it is, or why you need it, it's just in time, you'll get it whenever. In fact, I'll go a step further. This just came to mind because it really irritates me, is I got a hold of one of the senators from one of the silver states and told him, excuse the expression, how the cow eats the cabbage, and what an idiotic thing it was to take something as valuable as silver from the strategic stockpile and believe that you could make up for it in just-in-time inventory. If you want to sell it, okay, I guess I'll go along with that, but make sure that you can get it if you need it. And his answer was, it's just in time. And I said, no, it's not. And I went down that road and got the door slammed in my face, but at least I got to say what I wanted to say.
And that's very interesting, because it brings me on to the point that I was reading in your latest research report, where you use a very good analogy that the wholesale silver bar, the London Good Delivery, people call it the 1,000-ounce silver bar, that there's only a finite amount of those bars, and that it could be analogous to looking at that compared to Bitcoin, where, as everyone knows, they say there's 21 million Bitcoins, 18 million maybe mined so far. There's a few million maybe missing over the years. But it is interesting that with a wholesale silver bar, if you look at the worldwide population of those bars, it's not that big really, is it?
No, it's 2 million bars. I mean, this is another irritant of mine, is some of the, I'll call them more or less apologists for the silver industry, will tell you, like it's, 25 billion ounce market. Well, that counts every molecule of silver that's ever come out of the ground. And as a physicist, yeah, they probably exist, but most of them are back in the landfill. And then they go on to explain what the silver market is. So they're basically talking out of both sides of their mouth. The silver market, the way it's determined is by the commercial bar market, period, end of story. You could actually think of a silver coin minted by a government or not, or a silver bar made by RCM or BullionStar or whoever, as kind of a derivative of the physical in a way. I mean, a 100-ounce bar usually comes from a 1,000-ounce bar being melted or extruded or whatever. I don't want to get too technical. I want to keep on point. There's 2 million or more, somewhere in that range, 1,000-ounce bars. That's the silver market. When you are in the silver exchange, be it the LBMA or the COMEX, that is how the market is determined. It's a paper market, really. There is physical there, but it doesn't back up a one-to-one. So that market, you can't say that market is supplied by all the silver that's sitting in landfills or religious objects or utensils or jewelry. It's not true. So the real physical silver market is somewhere probably around 2, 3, maybe 4 billion ounces, period. That's the silver market. Now, could you melt down religious objects and put them in a good bar form? Sure, you could. But the smelting capacity and refinery capacity has been diminishing. Major banks are leaving the industry, like Scotia. Yeah. So this market's getting tighter and tighter, and there's really less and less. Well, let me reframe that. It's getting tighter and tighter, and the demand's getting stronger and stronger, and the game is being revealed where people see the truth. The curtain is being pulled back, and people are starting to get a look, and they want to see deeper. They want to see the whole story. They want to know the whole truth. And I think that's what you, I, and others are doing in this industry. We're not. And the last thing that came up earlier was, this idea about the ETFs. If you go back to Blythe Masters, and I'm sure you probably recall who that is, she was on TV one time and said, well, look, JP Morgan has all this silver, of course, but the only, hedging that we do is for our clients. We don't have a position in the silver market. Our clients do. All right, Blythe, let's analyze that for about 3 minutes. If you are truly hedged, so I'm BullionStar, and David Morgan calls up and puts $1 million on for a delivery. You go in and hedge it. So it's $28 silver, So I'm buying at 28, you sell 28. So if the market moves up or down, you're net neutral. For every dollar that the silver market moves up, the physical market moves up $1 with it, and the short moves down $1. The reason you do that, you're in basically the warehousing business, and I don't want to put words in your mouth. You can explain it when I'm done. But basically, when you make a sale to a client, even though you might be bullish silver and have your own stash and stack every day, doesn't mean that when you do the business, you don't hedge it. That's a neutral hedge. So you're neutral. You are just a participant that has the ability to deliver silver, but you can't take any exposure to price movement. Well, if that were true, then there'd be no big deal about these ETFs. But as you, above anybody, the destroyer, came in and showed, they have to cover their butts even further than their already unbelievable paperwork called the prospectus, and make darn sure that they're covered because of what's really going on. So they're not net neutral. If they were, it would be no big deal to them, and they wouldn't put out a paper saying that these rotten, nasty little guys are trying to corner the silver market when they put a lid on this thing for years.
Yeah, it's interesting that every time that there is a spike or uprise in the silver price and the gold price, you get the investment bank analysts or the head of trading coming on CNBC. And so that itself is a warning alarm that there's something up that they need to defend. And it's exactly like the CFTC recently. As you said, they're looking into going after the retail crowd for something that is patently absurd, accusing them of manipulation, when all in front of the CFTC for years there's been manipulation. And the CFTC had their investigation 5 years between 2008 and 2013, didn't find anything. And then they were basically forced into admitting, when the Department of Justice went after JP Morgan and fined them in 2019 and prosecuted them in 2020, the CFTC had to admit that that was happening. So it really, anything that maybe JP Morgan says on CNBC or the people that come in from Goldman Sachs, it's difficult to believe. But that brings me to the point, I'm always confused about, this big short that's meant to exist on Wall Street. So the bullion banks have a big short in the silver market, in the paper silver market. Now, you said something interesting that, well, the JP Morgan silver short was taken over and inherited when they acquired Bear Stearns in 2008, when Bear Stearns had to be rescued. Is that something that still exists, that silver short of JP Morgan, that they've always had it? They've never tried to cancel it out? And do other banks have that same short position, like a handful of Wall Street banks?
Well, two comments on that. One is, I've never seen, the paperwork to see that, JP Morgan took over Bear Stearns' position. So I wouldn't call it a rumor. It's well established in our community, but I wouldn't be able to go into court and testify to that fact. I've never been able to verify it, but let's assume it's true. The more important question is your follow-up question, which is, do they still hold that? I doubt it, because the way that the algorithms work is, it's like, what a Bollinger Band is?
Yeah, it's too high and low bound.
Yeah, so it's like the Bollinger Bands. As the price of silver moves up, their buy and sells are between the bands. So they're not short silver at $5 anymore, but they were in 1990, okay? So now they're short, their lowest short position might be at 12 or something like that, but they're still short. And the positions have been gaining in size. I mean, back in 20 years ago, the amount of participants for the open interest was far lower than it is now. So there's more and more participation in the futures market than there has been in the past. So I think they've probably taken over the book, and it was massively short. And I think that they have been in positions where they could probably walk away with a profit and never come back, but they're too greedy. So the game works once, it works twice, it works 100 times. Let's keep it going. And sometimes they get a little ahead of themselves, like they are right now, and they're really not in a position where they can cover very easily. And Lord willing, there'll be a time where they'll have to cover, or one of the participants, one of the major banks, one of the main 4 or main 8, decide to jump ship and say, we've got too much pay under management. We're going to close our bullion desk. We're going to paper only. We're just going to use the SLV, which is a stock. I mean, that's a stock certificate. And we're just going to use that paper market for our trading desk. We're going to close down the actual bullion side. So a lot could happen, Ronan. I don't know the future, but I do know the facts. And we are sitting in a position where it's getting tighter as far as, the amount of silver available for delivery, and tighter as far as how many participants there are to be able to spread this good news for us, bad news for them around. And that's going to continue, in my view.
Let's just say, hypothetically, and hopefully it will happen, that the silver price, the US spot price that's traded in London and New York, went up above 30 and stayed there, was convincingly staying there above 30, and then started to zoom higher, as the silver price is known to do at times. What do you think would happen? What would that trigger? Because I remember you saying in your report recently that something Jeff Christian said, you mentioned, that 87% of a price increase happens in the last 7-8% of time of a bull market. So some of these moves can be startling and just completely off the charts. If there was an off the charts move up in silver, what impact is that going to have on everything, like the retail market, the COMEX, the ETF, ability to source for the ETFs?
Well, this is educated guess, and I'll emphasize the word guess. I've obviously thought about it for years. But I think, first of all, most of the silver users, your industrial side, get it direct from the refinery. They never get it from the COMEX unless they have to. And maybe some of that 22 million ounces that came off wasn't investment demand only. Maybe some of that was for industry that sees their warehouse only stocks, 2 months supply or 1 month supply or 3 month supply would be my guess at the most they'd ever, warehouse. So they do believe in just in time inventory. So now if they're wising up and see what's going on, or maybe they got tipped off by one of their bullion banker buddies that, hey, look, the investment demand's really strong, but you have to have it to produce. You're first on our book. How much do you want? You better get it now. But once that little flight to silver starts, it could open the floodgates, and I believe that it will, because it'll spill over. So what would it do? It would cause a run to silver. What does that look like? I don't know. I was there in 1980. I saw what it looked like in Los Angeles. It was insane. I mean, back in those days, people really thought of silver as money much more than they do today. But there were people standing in line for well over a block at different bullion dealers to cash in silver when it hit the all-time high. And so it was coming from everywhere. So I think we'll see something similar. It's difficult to say. I'll go on a little bit, Ronan, you could give me your ideas. One, I think that the government would probably come in and do some kind of a control mechanism. Like, okay, we've determined we need silver for strategic purposes. And what we're going to do is we're going to look at the two main ETFs, the iShares and the Aberdeen Trust, and we're going to allocate metal from there that we need for the war effort or whatever. So that could be, and again, this is a guess. They're not going after your silverware, your silver tea set, or your, monster box. That is not going to happen. If they get in a real squeeze where that really is almost impossible, I believe what would happen is they would overbuy, meaning they'll lock silver maybe at $100 an ounce, for an example, and say anyone that could give us over 500 ounces, or maybe 100 ounces, probably 500 or 1,000, in any form, monster box, 100 ounce bars, 10 ounce bars, we don't care. We will give you 110 for it and no tax. We need the silver. You've got it. We want it. Here's the deal. We'll give you full price plus 10% plus no tax consequences. Now, I know that sounds extreme, but believe me, if there's anything extreme in the financial markets, it's the silver market. Read Jerome Smith's Silver Profits in the 80s. Read what happened to the Hunt brothers and silver bulls. Take a good hard look at history, and silver actually is a much more interesting story than gold. Not that gold's uninteresting, but does that sound extreme? Yeah. Is it going to happen? Probably not. I think in extremes, but it's indeterminable how much of a demand there could be because it's essential, it's irreplaceable, it's absolutely needed in industry. And if the silver stackers are not willing to give it up until the price is commensurate with what they feel it's worth, it could be a very tight situation. So I'll give it back to you. How would you answer that?
So yeah, David, I would say that everything you say could happen. And another thing that I haven't mentioned, which is your specialty, is about this silver shares, silver stocks of silver mining companies, both the top tier, mid tier, and the minnows. I think they would all obviously zoom up, but could there be a case where the government might confiscate or nationalize silver mines in the US or maybe in Canada that would be part of that effort to requisition physical silver that couldn't be sourced on the market?
You couldn't rule it out. I mean, I don't, but I doubt it would happen, but it could. Usually what happens, the worst case is what happened in the 30s with gold. People say they confiscated it. Not trying to play semantics here, but really they paid the going rate at the time and then they changed the price. So you might see something similar. You're nationalized, your shares are bought out at the going rate, and then all silver for the next 3 years that comes out of Mexico is for the Mexican government and whatever. So could it happen? Yeah. Will it happen? I doubt it. Would it be an absolute silver stock owner really got hosed? Probably not. Especially the people that, with the internet, people are a lot more educated and more savvy. So, they have shareholders they answer to. So management might have to build the contract to where, you get bought out on your share price, but it's going to be over the next 3 years. And as silver increases, the share price will be commensurate with the increase in the silver price. And therefore, you're going to get this amount of fiat. But the problem with silver, which is not a problem from my perspective, is you want the silver. You don't want the fiat. That's the whole reason we're in this market as a hedge, is because we don't feel that fiat is going anywhere except into the toilet bowl of history, like all fiat currencies. So you might want to spend your silver directly. And that's what I was getting at before, is that, the stackers might say, I'm not taking that. I don't want that, So there's a lot to be determined. Of course, in a free market, price will determine everything. It can overcome almost anything. It can't overcome something that doesn't exist, or, when the last ounce is bought or the last ounce is mined or whatever. But I digress. I'll give it back to you, Ronan.
Well, talking about price and the old adage about price dictates demand and supply, equilibrium price, and at the right price, silver and gold come out of the woodwork, so to speak, and could replenish lack of stock. But looking at prices of silver over history, over the last 100 years, a thing that a lot of people are interested in, and I know you mentioned it recently also, is the inflation-adjusted price of silver. And I did an article about that back in early January, and I was using the charts from Nick Lard's Gold Charts or Us site, and he uses the data that feeds in from John Williams' Shadow Stats. So there was two different, he did two different types of charts. One where he just adjusted the prices of silver back in the last 40, 50 years based on the methodology for the consumer price index that the US government currently uses. And then he did one where he adjusted based on the old methodology that the US government used in 1980. And even for the version that the CPI uses now, that comes out at like $140 per ounce. And then for the old inflation methodology before the Bureau of Labor Statistics started suppressing the price, or suppressing the CPI. The adjusted price for silver back in January 1980 was a staggering like $966, nearly $1,000. So do you think that if the market is let loose, so to speak, in the coming months, years, that we could be looking at those type of prices, or at least triple-digit prices?
Well, I've said $100, so I'm pretty confident of that as a minimum. But
Yeah.
it depends on how this Reddit group, and it's not just them, but it's an awareness. If we get a market participation rate that's equal to what it was in the 70s, in other words, in the 70s, silver came out of the coinage in 65. So a lot of people that thought of silver as money, a store of value, a hedge against inflation, and all the attributes that you and I talk about, industry didn't really use that much in those days. But there was a lot more savvy, aware individuals about investing, and metals were not looked as, it was actually looked as part of a balanced portfolio in those days. If we get that kind of a mindset into this population at the same percentage rate that we had in the 70s, look out, we could certainly see those numbers.
I mentioned earlier that you are an expert on the silver mining stock sector. Would you like to say a few words about that?
Well, the way I set up the Morgan Report, if you become a premium member, you get an article written by me called How to Use the Morgan Report. I believe in rifles, not shotguns. I have top tier cash rich unhedged companies in the top tier. And it's not just silver and gold, although primarily that's a folks who have a really great uranium stock that finally has taken off to the moon. And we have a little exposure to the crypto scene, which I'm not real hip on, but it's a place to store and make money. We've been writing about it for 2 years. And I know you get the actual report, so you know what I'm talking about. But no, I like, if you go back to when I bought Pan American at like $2 a share, I mean, Ross Beatty's mandate was to become the largest primary silver producer on the planet. He's pretty much met that. I mean, Ross is the real deal. You look at what Keith Neumeyer has done with First Majestic, those are two. You look at Silver Wheaton. I mean, we had that as Chap Mercantile when it was not a joke. It was a great idea, but people didn't even know what it was about. They didn't even know what a silver stream was. So, those are three that I think you can buy as blue chips. And then there's others that are, like Mag Silver, one I've owned for years and years. I mean, that company, I was there when they basically founded the company. I met one of what I'll call the promoters and the GO, which were now great friends, or I consider a good friend anyway. Dr. Peter McGaugh, very humble man, is top of the list as far as I'm concerned, taught me a lot. So there are ones out there, and there is opportunities. I think, and I don't want to cut into your business at all. I mean, I think BullionStar is one of, the top 3 or 4 that I like personally. But you might consider parking some money into a quality silver stock if you don't want to pay these premiums right now, because you might be able to take that money out as the silver market gets through this congestion phase and starts to move up. The shares usually do better percentage-wise than the bullion, not always, but it might be a place to park some money. Well, I really don't want to pay that kind of premium. So you might consider that. It's up to you. There really is no silver mutual fund anymore. The ETFs have replaced it. There used to be one by Fidelity called the Strategic Silver Fund. It was awesome because it was like 20% bullion and a mix of top tier, mid tiers, and juniors. And it was like the go-to place. I'm too old and cranky to start a mutual fund, but if I was going to start one, I would do it like that. My mandate's always been the same from the beginning, is buy physical first. I don't really want you on the Morgan Report unless you own physical. You cannot be a metals investor unless you own the metal first. So just re-emphasizing what you said. I mean, the shares are fun. They usually do better, not always. You do get leverage, but both directions, higher highs and lower lows. And it's not for everybody, but it is a way to adjunct your physical holdings. And I've done it. In fact, some of my best silver buys have been because I bought a stock that, let's say, tripled and silver only was up, 30%, cashed out and bought more physical, right? So
it's a good way. It's like the old, or not the old, the very new battle that you see on Twitter between the Bitcoin maximalists and the altcoin people. Bitcoin people say, hold Bitcoin, and the altcoin people say, well, altcoins are a great way of creating more money to buy more Bitcoin. So there's always going to be two different sides, two factions. So I guess in the silver world, there's people who just want to hold physical. There's others who want to use silver stocks to create more ammunition to buy more physical. I think we're going to wrap it up, but it would be great if we could talk again in the near future or sometime this year, because I'm sure there's a lot more developments going on that we can talk about later on in 2021.
Well, Ronan, thanks for having me. Compliments back to you. It's really nice to have people of your caliber, let's say, helping out the community. I'm part of it. I certainly, it's nice, that because I don't, have the temperament to go as deep as I used to, although I still have a pretty good wealth of knowledge from years past, as we discussed. One last thing, this isn't a setup, but we talked about the silver chart from Nick Laird. Nick and I have known each other pretty much from almost the day he started his charting service. There's a chart that I just put out on my weekly perspective. So if you go to my website, themorganreport.com, and sign up for the free Morgan Report, I go through a chart that came out in Forbes when Buffett bought his silver going back to 1344. And the high price for silver on an inflation adjusted basis. So a dollar equals a dollar. It was done in 1998 when Buffett announced his purchase or very close to that. And the all-time high in inflation adjusted basis is $1,477 per ounce. And the title of this weekly perspective is Silver Worth $400 an ounce. On an inflation adjusted basis, silver was $400 an ounce from 1344 to 1544. So for 200 years, the value of silver was $400 per ounce. So think about that, that little bag of dimes that you have, 10 of those makes an ounce base, or actually 10 of those makes 3/4 of an ounce. A dollar is roughly 3/4 of an ounce. So $1.30, $1.40 equals an ounce of silver. I mean, that's $400. Even today, $400 will buy you something. Can you, so there you have it. I just wanted to throw that out. I'm very much looking forward to keeping our relationship building stronger, and I'll come back anytime. And thanks for the help you've given me. It is appreciated. I want to publicly acknowledge that. So thank you.
Oh, no, thank you. It's an honor that I'm speaking to you, because I remember your name from the last 20 years. And it's really a great honor to be sitting here talking to you. So thank you very much. And we will talk again. Hopefully someone like Chris Marcus, if he organizes a conference next October, a physical conference somewhere in the States, I might go to that and we could meet then.
Good. Thank you so much, Ronan.
Okay, thank you, David.